Microstrategy, MSTR, what the crypto community thinks about the blueprint. Welcome back to the channel. Today we are going to discuss the keys things that can set back there for years BTC expected cycle gains. We will listen to several experts from our Reddit community. Here is the first. The way Microstrategy works is they raise tons of money by spreading the volatility risk of Bitcoin out over a 4 to 5 year time frame. Bitcoin so far in its life has always made new all-time highs on a 4-year time frame, so this captures all the upside while theoretically minimizing the volatility risk. Where I see Microstrategy's business model facing real turbulence is if Bitcoin skips a cycle and has an extended bear market, which outlasts the time horizon baked into their bond offerings. Other risks to investors, but not necessarily the business itself, is if Bitcoin has a particularly bad drawdown. Since the stock is basically a leveraged Bitcoin play, the stock will move way more deeply. Here is a reply to the feedback. To be honest, this guy is 100% correct. I've been in crypto since 2017, and it absolutely does come in for year cycles, and there's a real chance of an 8-year bear market, which is what a skip cycle suggests. This guy gets it TBH. The others weren't fully convinced though. Let's see what they had to say. No, you're not an expert. At least not an MSTR. Spread the volatility risk of Bitcoin out over 4 to 5 years. MSTR is more volatile than BTC, not less. Now an expert opinion on Microstrategy MSTR. I just sent this in an email to a friend of mine who was asking about MSTR. I also participated in some discussions of this in a few threads here yesterday, so figured I could post it here as well for all you regards. It might read a little bit like this is an email I sent to a friend who is financially literate, because that's what it is. Note, I'm not taking a firm position on what Saylor is doing. For the record, I'm a long-time Bitcoin bull and semi-maxi, but there's no such thing as infinite money. This has massive potential to end badly, but the music is playing, lots of us are dancing. This post contains some commentary and some of my opinions. I'm happy to answer questions or correct anything I have wrong, but I don't plan to get drawn into debates about my opinions or the value of Bitcoin and whatnot. That's a different topic. Now the final feedback to the last theory. Dear regards, so his convertible bond strategy is actually a hint of genius with a side of trepidation. Here's the rundown. He's selling 5-year corporate bonds at 0% interest with a convert price that's about 50% above the current share price. I think that's the ratio. Could change per issuance, not sure. For this example, let's say the stock is trading at $500 and the convert price is at $750. MSTR then uses the bond proceeds to buy Bitcoin and add it to their balance sheet. Bitcoin goes up. Their value per share goes up. Numbers go up. Forever, right?
Accounting treatment. If the bondholder keeps the bonds for the full 5 years, they get their principal paid back without interest. However, if at any point in that 5 years the stock is trading above the convert price, the bondholder can surrender the bond and be issued stock shares freshly created for the conversion equivalent to the bond value at the convert price. So if the shares are trading at $800, they could convert a $1 million bond into 1,333 shares. $1 million, $750 equals $1333, and cancel the bond. They would then have an implied profit of $66,000 on their $1 million, $50 above convert x 1333 shares. They could sell to lock in profits, or if they keep the shares they get additional upside, downside, or some combination. The conversion is dilutive to existing shareholders, but it only happens if the stock has already appreciated, so the shareholders have been totally fine with it. The bondholders have an incentive to convert, as it allows them to take profits ahead of the 5-year term, and they can either hold the shares or sell them, or some combination. Of course, there is also a secondary market for these bonds, and they are trading well above par in anticipation of high convert value. Once converted, the bond is paid, void. So if his stock keeps going up, he never has to pay back the bonds with cash. Anyway, IRC, the first bond issued like this was at a par value of $100 per share with a $140 convert price. That was pre-split, so 1/10 that for current value $10 per share with a $14 convert in today's shares. so those folks have done pretty well. So, these bonds are giving fixed income investors the upside exposure to Bitcoin, and they are absolutely gobbling it up. Most of those portfolios can't buy Bitcoin, and many can't even buy stocks, ETFs, but Bitcoin, wrapped in stock, wrapped in bonds. Shut up and take my money. What could go wrong? I've heard rumors that the next MSTR bond offering is going to be at a negative interest rate. Investors will have to pay more than face value to buy the bond. However, if the stock price doesn't rise and the converts don't happen, he's on the hook to pay the bond back at the maturity date. He has 3 options. 1. Roll the debt into new bonds that the market will tolerate it, to pay the bonds off with cash on hand or with cash from the operating side of the business. Or 3. Sell enough of the underlying Bitcoin to raise the cash. He has said he will never sell, but when push comes to shove, who knows? He could also issue additional shares to raise capital to pay off the bonds. This would dilute shareholders and hurt his stock price, but would be a valid strategy if needed. Of course, if he's having to sell some of his coins, we can assume we are already in a deep bear market. This selling would of course push the price down further. Rinse and repeat. That would suck. And the more and more of these bonds he sells, the less likely the operating business will have enough cash to pay them off. Could get spicy. Importantly, none of the Bitcoin are encumbered in these bonds, and there is no opportunity for them to be called early or margin called in any way, even if Bitcoin price drops to 0. They just need to pay off the bonds when they come due, if they ever come due. He is aware of the typical 4-year Bitcoin boom and bust cycle, and I expect he is structuring his maturity dates to account for when he would expect market lows and highs. But that's far from a guarantee. If he can't pay the bonds, he's looking at an epic bankruptcy and his coins getting liquidated to pay creditors. This would also cause massive market selling by essentially everyone front-running their bankruptcy sale. FTX nods with knowing approval. Note, this isn't FTX 2.0 here. Saylor is doing this all in the open. This isn't fraud, it's clever with risk. His underlying plan is to entice other companies to follow in his footsteps, so he's not the only one pumping Bitcoin. I'm seeing more and more announcements all the time. People are taking notice of his success. I think this is really where the systemic risk applies. MSTR is early to this game. So far they are playing the game conservatively well. Okay, conservatively. But as other companies follow him down this path, they will get more and more aggressive. It's human nature. Take what's working and leverage it to the tits. Once we have the lower third of the S&P index all doing the sailor to goose their profits and Bitcoin is trading in the millions, and somebody fucks up because they took the Bitcoin wrapped in stock, wrapped in bonds, and wrapped that in dog shit and wrapped that in cat shit and then sold it to the Saudis, the implosion risk is off the charts, and it will be a huge risk. Impact to the overall markets. It will also wipe out anyone buying Bitcoin leverage long. Don't mess with BTC leverage, kids. Interestingly though, even if this all blows up, it doesn't threaten the Bitcoin network. The price will crash, sure, but miners will mine, some will go out of business, but others will survive. The network will still process transactions. There will still only ever be 21 million coins, and the price will recover to some level that reflects future demand. No idea if it would ever recover to a new all-time high, but it would survive and continue to function. If you have your coins in self-custody, you'll be safe aside from crying over the massive loss in dollar value. Some new narrative would take over. The asset would remain scarce. A new narrative would emerge. Of course, then there is all this talk of creating a national Bitcoin reserve where nation-states are all in an arms race to acquire BTC. For the record, I'm very unenthusiastic about the national Bitcoin reserve thing, even if it would pump my bags. It might happen, but I don't love the idea of massive government involvement in Bitcoin. That said, Bitcoin is a permissionless network, so if governments want to buy it, there's nothing anybody can do to stop them.
It's a feature, not a bug. Also regarding accounting treatment. Bitcoin is currently held with the tax treatment of indefinite intangibles. This is the most conservative tax treatment possible. It is for valuing things like art and trading cards. If the value goes up, you cannot recognize the appreciation higher than your purchase price. If the value goes down, you must recognize the loss as an operating loss. So that really sucks from a corporate perspective, and I expect it has kept a lot of companies on the sidelines. The FASB accounting rules are changing in 2025 to shift Bitcoin to fair value accounting. Going forward, companies will mark to market quarterly or whenever they announce earnings, and it will apply the profit or loss to the corporate treasury balance rather than operating income. This will be a much more fair treatment and is the right way to do it, given that Bitcoin has a very clear price discovery mechanism. Importantly, when MSTR reports their first earnings under this new rule, they're going to be able to recognize all of the performance of all of the Bitcoin they have purchased. Tons of it has been marked down impaired since the drop from $69,000 to $15,000. and they haven't been able to recognize gains on anything above price paid ever on their official earnings statements. Their first earnings of 2025 are going to be insanely higher than past, and if the street is maintaining this high multiple, it will get a lot of attention. On the other hand, none of this is a secret, so it's probably already priced in. It could explain some of the crazy price action lately as we get closer to January 1st. I think their fiscal year ends December 31st, so Q1 earnings in April would see the skyrocket in their standard balance sheet. A brave new world. Long Bitcoin, long MSTR, massive risk once tons of other companies follow suit because people are greedy bastards and will lever this strategy to the tits, and it will blow up in a supernova of financial ruin, and Bitcoin will still keep chugging along same as it ever was. In 5 years, Sailor will either be the richest man in the world or he'll be in the back of the Turkish embassy being dismembered by a Saudi hit squad for destroying MBS's oil fortunes. Probably nothing in between. You can share your thoughts in the comments below. Disclaimer: the views, thoughts, and opinions expressed in this video belong solely to the author and should not be taken as investment advice. Do your own research before making any investment decisions. This content is informational and should not be considered financial advice and do not reflect ViCrypto's opinion. ViCrypto is not responsible for any financial losses. Hopefully this was helpful for you guys. If so, feel free to give me a like on this video. Don't forget to subscribe. Thank you so much for watching. Have an awesome day.